Welcome to our presentation on Insurance Basics, the quick and easy version, part 1. This is brought to you by rebelcapitalist.com. This is the quick and easy version because we are going to quickly cover the basic types of insurance that are available to people today. Okay, what are we going to cover in Insurance Basics part 1? We're going to talk about what is insurance, then we're going to discuss life insurance, homeowners insurance, and auto insurance. So what is insurance? Well, insurance is a legal contract. It's a contract between the insured party and the insurance company. Insurance transfers risk of unexpected loss, and this transfer is actually between the insured party and a pool of funds that are used to cover the unexpected loss. Now, insurance companies, they're responsible for making sure that there are adequate resources to cover these losses, and they use very sophisticated financial models that predict losses. Okay, let's start with life insurance. Group life insurance. Group life insurance is typically defined by a specific group of insured people, such as a group of people defined by a place of employment, such as Acme Manufacturing. Many employers offer this as a benefit, employee benefit. And then there's individual life insurance, and this is what I'm saying is ordinary life insurance. Policies that are typically purchased through an insurance agent. Now, group life insurance premiums tend to be lower than the individual life insurance, but you have to be careful. You have to read the fine print of the policy for group life, and they tend to not be as flexible as individual life insurance policies, because individual life insurance policies often give the insured various options and endorsements that can be added to an individual life insurance policy. The reason why premiums on group life tend to be lower is because you're spreading loss over a large group of people, so it tends to bring premiums down. Let's continue with more on life insurance. Term life insurance. Term life insurance provides protection for a certain amount of years, and then the policy simply goes away, it expires. Now you have whole life insurance. Whole life insurance protects for the entire life of the insured person. It's long-term and permanent in nature. And term life premiums tend to be less expensive than whole life premiums. And one of the things that a whole life insurance policy provides is something called cash value. There's kind of an accumulated cash value in a life insurance policy. Some people often borrow against this cash value. Whole life insurance provides somewhat of a savings component to it. Talk a little bit more on life insurance. There's a relatively recent life insurance product called Universal Life Insurance. Universal life insurance policies combine an investment component with the life insurance protection. They are slightly riskier than term and whole life because of this investment component. Now let's turn to homeowners insurance. Now there are certain important keys when shopping for homeowners insurance. One of them is what perils are covered. Is it falling objects, fire and lightning, windstorm, hail? Another one is the deductibles. Another important thing are the deductibles. These are out-of-pocket costs to cover losses. Higher the deductible, lower the homeowner's insurance premium. And we have to be careful. We also have to read the exclusions and the endorsements, because there are various exclusions and endorsements attached to homeowners insurance policy. So we have to read the fine print. We have to make sure that we are aware what the policy doesn't cover and what can be added. Automobile insurance. Automobile insurance policies are standardized. There's an industry standard, and it's called the Personal Automobile Policy. And this policy is divided up into parts. Part A is the liability coverage. This is protection from lawsuits that may result from an accident. You have two options for liability coverage. There's a combined single limit, and there is the split limit coverage. Split limit usually goes like 10,000 per occurrence and maybe 100,000 overall. Part B is the medical expense coverage. This covers medical and funeral expenses of the policyholder, family member, or other people injured in a covered vehicle. And sometimes this coverage may even cover the policyholder if he or she is not driving the covered vehicle. It could be that they're walking down the street and they happen to be hit by a car. Some policies, Part B policies, will cover the injuries of that policyholder. Let's go over a little bit more on automobile insurance. There's Part C. Part C covers the uninsured motorist. This provides coverage for injuries caused by an uninsured motorist or negligent driver whose insurance company is either bankrupt or a hit and run. But the important thing here is that the other driver must be at fault for this coverage to kick in. There's Part D. Part D covers damage to the automobile. It covers collision, or there is the comprehensive physical damage, which would cover vandalism, fire, theft. And again, just like on in the homeowners insurance policy, you have to pay attention to the exclusions. What is not covered? That concludes our presentation on Insurance Basics, the Quick and Easy version, Part 1. Thank you for your attention. Please visit us at rebelcapitalist.com. Good day and good luck.